Welcome back to my YouTube channel. This is the Captain Gala. Today is a new day and we're going to have a new video and a new lesson. Thank you guys. If you haven't watched the previous videos, there are very many videos there. You can go and watch them. They contain a lot of information and lots of lessons. Then you go take your time, watch those videos, pass through them, and you are going to learn a lot about forex trading. Now today we are going to we're going to look at some very simple thing that very many people have been asking for, and I'm here to train you about it. Now don't worry about anything, and we are going to start with the immediate effect. Now there's something called very many people have been asking me, the captain, how can we take the profit 1 and profit 2 at the same time in one trade? Now today I'm going to show you how to take profit 1 and profit 2. Yes, sometimes let me say you are doing some analysis on the market, and you've come across, because let me say you're waiting for the market to break your current resistance zone and another support zone for you to enter that given market. Now you will find that you're going to have take profit 1 to be taken and take profit 2. Now I'm going to show you how to enter take profit 1 and how to enter take profit 2 in the same trade. That is the question that very many people have been asking about, and this is the time we talk about it. Now, as I told you earlier that the market always move on a zigzag. The market will never move on a straight line. The market moves like this. You can see this. The market moves on a zigzag. Let me say you enter the market somewhere here. You enter the market somewhere here on a buy, but these are called Fibonacci retracement levels, and I will do a video for that. These are called retracement levels, or the resting place for those people, because here the market will always form higher high and higher low. That is it. Now let me say the market, somebody entered the market from here, and let me say your take profit 1 was this place and take profit 2 is this given place. We can name them. Let us give them a name. Tp1. Let us make Tp1 to be here, then Tp2 to be here. Now let us give another name to be Tp2. The next name is Tp2. Now, if you have named them Tp1 and Tp2, now what you know where the market is going, because you have entered on a buy, and the market is somewhere here. This is very simple. How do you take your take profit 1 or take profit 2? In empty farmer, empty fight, you can only put take profit 1, then later you close it and put take profit 2. But this video will help you on how you can enter take profit 1 and take profit 2. First thing you have to know, when you let me say when you have entered this market, your stop loss will be below this zone. TP1 will be here and TP2 will be here. Now this is what you do. Once you have entered a trade, that one you have done what we call instant execution. Instant execution is instant trade. Instant. You are not waiting for the market to execute a trade for you, or you are not waiting for the market to either hit your buy stop, sell limit, and sell stop. Which means you are not predicting that market at anymore. You are entering that market right away at that given price movement. Now, once you have entered this market, put your stop loss very well where it's supposed to be at this given zone. Once you put your stop loss there, then your TP is here. Enter TP. put your TP1 in your MT4. Once you have put your TP1 in your MT4, what are you waiting for? Wait for the market to move. Once the market is about to hit your TP1, once the market is about to hit your TP1, move your TP1 to TP2, which means you are going to do what we call, we are going to edit, we are going to edit or correct what is happening in your MT4 account, MT4 ama MT5, which you already created the trade. Now what you are going to do, you are going there to your MT4, that trade. You are going there, you are going to correct it, or you are going to correct it where you are going to move, where your TP1, you are going to move your TP1 to TP2. Then stop loss, before the market hits your TP1, stop loss, you are going to move some 20 pips or 30 pips away from TP1, which means stop loss, as you move TP1 to TP2, stop loss also, you are going to move stop loss to 30 pips below TP1 before the market hits your TP. I hope I'm clear with that, because when the market hits your TP, it is going to close your trades automatically. Now, to avoid that, don't wait for the market to hit your TP, because once the market hits your TP, all your trades are going to be closed, and you are not you are going to enter, you are going to be required to enter new trades. Now, before the market is your stop loss, is your TP1, move the TP1 to TP2, then stop loss. Kindly move a stop loss from here, then move it to some 20 pips below the TP. You will be good to go. Once the market sees this, what am I talking about here? Once you have moved your TP1 to TP2, which means when the market hits your TP1, it is not going to close. The market will still have an opportunity to move upwards for you to capture this given movement. Now, what do you do? The reason behind this is that the reason behind moving the stop loss is that the market cannot come back here and makes you into losses. When the market hits this zone, remember you had removed your TP stop loss from here to 30 pips below your TP1 before the market hits TP, which means when the market reverses against you, you will not lose your money because you already secured these profits which were here. Now, what you are eyeing for is the TP2. Now, when the market has hit your TP1 and it has surpassed going to your TP2, which means it has covered like a half or a quarter of your TP2, it has covered some half of your TP2. What you are going to do, you are going to move your stop loss, which was 30 pips below TP1, you are going to move it to TP, to half of TP2. You are going to move it, not half, you are going to move it to TP2, which means stop loss is moving here to TP1, then TP2 will remain here, which means when the market reverses against you, it will get like when you have secured all this TP1 profit. Now you are not worried about the market, because whether the market when the market reverses against you, you are very okay. You will be very okay because you are not worried about anything, because the market is in your direction and you are not worried about anything, because you shall have secured your TP1. Now you do this again. When the market is approaching your TP1 and it is some 30 pips to your TP1, move your stop loss is 30 pips to your TP2. I mean, when the market is approaching your TP2 and it is some 30 pips to your TP2, kindly move your stop loss from TP1, put it half to that TP2, which means when the market reverses against you, the market is just only going to close all these profits, but you can never make a loss because you have already secured this profit from the TP1 to half of the TP2. Then you wait for the market to hit your TP2, because whether the market doesn't hit your TP2, you shall have secured half of TP2 and also full profits on TP1. It is very simple as that. Some people might be thinking that uh, it is something very hard. It is not hard. It is something very simple as this. And this is something you can either do in your MT4 or MT5, because you can go there and edit your trade. By editing, it is where you can put your TP1, TP2, as you can edit your trade more for you to enter those TP on those given trades. Now, when you are going to edit your trade, you edit your trade by moving your stop loss and moving your take profits, so that the market, you secure all the profits you had already made. Now, some people might be asking. There are some people also ask me about how to enter markets on retracement. I'm also going to talk about that, and I decided that always I told you that the market always move on a zigzag. The market always move on a zigzag. Let me move this to 1 for us to have some serious thing. Now, let me say you are on a bullish momentum. The market is moving on on a zigzag, and it is hitting your Fibonacci retracement levels. You can see this. And what I can advise you guys, the market is very unpredictable. That's why you get that some people always love taking TP1. Some people always love taking TP1 at half. Some people always, when the market sees only 100 pips, they are out of the market. That is one of the risk management techniques you should also take. Now, how do you enter the market on a retracement? Let me say you have 100 USD account, and I told you that you only risk about 1% per trade volume. 1% per trade volume, which means per trade volume, when I say 1%, you are only going to risk every trade you execute or you create, you're only going to risk 1% of that account. Let me say you are somewhere here, you enter the market at this given zone on a buy, then the market hits this zone, retrace, and from here you had entered with the 1%. I decided that standard first, let us go back kidogo. I decided that standard leverage should not pass 1:500. Standard leverage should not pass 1:500. The reason being, when you have a bigger leverage in the market, losing your money in the market, it will be very high, because it is like you will be risking a lot in the market. Having high leverage while creating a position in the market is like risking a lot. And when you risk a lot in the forex space, which means when you risk a lot, you are also be ready also to lose a lot of money, because when you pump a lot of money in the business, when the capital is big, the capital also attracts very many or huge expenses to that given trade. Now, for you to avoid that, you use lower leverage, because a bigger leverage will tend that you will be able to create bigger positions in that given market. Let me say you have a leverage of 1:500, and somebody has deposited 10 USD, which means in the broker's account you will be having 10 USD. But when you are creating a position in that given market, you in real sense you shall have created a position of about 5,000 USD, and you had only 10 USD. That is the meaning. Which means when you are creating huge positions in the market, the risk also is high. Now, to avoid that, this is one of the risk management techniques. Use my standard leverage as an advisor or your mentor. I will always advise only 1:500 maximum leverage for beginners. For those people who are struggling to trade, who have not become one of the profitable traders in the forex space. Now, for you to avoid risking a lot of money or wasting a lot of money in the forex space, can you use a smaller leverage? Too small leverage also has got a disadvantage. Don't use too small leverage, because too small leverage will also mean that you will be getting the chances of you getting profits in the market also will be very low. Now, for you to hold big trades, or for you to stay longer in the market, remember, for you to stay longer in the market, you also have to risk small. The longer you stay in the market, the bigger the profits. And also, when you are staying longer in the market, your leverage should be small for you to risk less in this given market. About leverage, I think I've already explained that. Now I was explaining about entry of the market at retracement level, and I told you that when you are entering a market, you should only risk 1% per volume over trade. 1% per volume over trade, which means when you are creating any position in the market, you should only be risking 1% of that given volume over trade. Let me say, when you are starting here, the loss size you should be using when you're using this standard leverage is 0.01. 0.01, depending on the spread of the broker. When you are using XNES, you should be using a leverage of 0.01. Then that 0.01, you have taken a buy on this market. When the market reaches here, I told you that the market must relax, and the market must also put a rest, or also take a rest. And those resting places in the market are the retracement levels. What we talk about is the retracement levels in that given market. The market is resting at that given zone. It is the retracement level. Now, which means that that market, the volatility of that market, the market is going to grab liquidity, then shoots above to your direction. Now, when the market retraces to this level, you are allowed to create another position of of risking 1% of your account, which means when you are having a 100 USD account, you should only be risking 1% of that account. Then when the market started shooting to your direction, remember, you will be in deep profit, because you will be in the profit of the first trade and the second trade. When the market retraces again to your level, you enter a new trade with, don't risk a lot, with just a lot size, or you can reduce the lot size. You can even use a lower lot size than that. You can risk half of that. You can use a lower lot size than the previous one, or you can just use the same. Now let me say the market retraced up to this zone. Enter the market with another lot size of 0.01. When the market shoots to your direction, let me say your TP is somewhere here, you will be in profit with the TP1, trade one entry first, the first entry, the second entry, the third entry. When the market is going to hit your TP, you are going to find that the market is, you are really in very huge profits, and the market, we say that you are really in deep blues or deep profit. With all this, I'm going to show you all this, because I wanted you to show you how to enter a TP1 and TP2 in the same given market. Now this one was just by the way. Let us go to live market. Let us go to live market. Let us go to live market. And the live market we're going to use, what I'm going to use for that information is the GBP card. We are going to check at the GBP card, and we are going to use GBP card as an example. GBP card, because I gave this trade to my students, and they really worked on the trade very hard. Let me say this one was our TP1, then TP2 was somewhere here. Though I didn't mark it because I did Sunday analysis on this, and I told you guys this is where you will get free lessons, and also you will be getting free signals on Sunday. Every Sunday we'll be posting Sunday analysis here. Come and watch this channel. You will be getting free signals for the week. Let me say you entered this trade from this zone. This one was the BOS, the break of this structure. Let me show you. Let us get a rubber so that I can indicate, because indication of those zones are good. Let me say the breakout candle was this one. You entered this trade, then the market was about to hit your TP. Let me say the market was somewhere here. you should, and the stop loss was at this zone. When the market hits this zone before hitting your TP, move this TP1, this zone to TP2. TP2 is somewhere here. You can see it, guys. Let me say TP2 is somewhere here. Remove this zone, your TP1 to this zone, then stop loss move to 30 pips below this zone, which means when the market is going to your TP, when the market is moving to your TP, you shall have secured all these profits, which means when the market reverses against you, you are not going to be in a loss rather, but you are going to be in a very deep profit because you have secured all these these profits and that's given market, because you shall have secured all these profits. Now what you do, stop loss below the TP1 with the 30 pips, then TP2, TP1 you move to TP2 here. Now when the market is here, it has moved past your TP1, it is somewhere here. What you should do, stop loss, you move stop loss to this zone, 30 pips below the price, below the current market price. When the current market is at this zone, you can move 10 pips or even 20 pips or 30 pips below that zone. Kindly move the market to that below that zone with some 30 pips. When the market hits this zone, remember when the market reverses against you, because your stop loss will be here, it means you shall have grabbed some full TP1, some of TP2, and you will not be worried about the market. Then you just, because closing, locking your profit, that is what we talk about, we say as locking profits in the market. And we decided that locking profits in a market is very important, because when you are locking your profits, you are securing the bag, which means the possibility of the market going against you is very hard in that given scenario, which means for the market to reverse against you is very hard, because when it reverses against you, it shall have closed your TP1 and some of the TP2. When the market approaches this zone, because when the market approaches this zone, there is a possibility that the market can come back here, retest this zone for it to go up. Now what do? You secure your bag again. Don't wait for that market to reverse against you. When the market has moved to this zone, come and put your stop loss somewhere here. When the market reverses against you, you shall have secured 3/4 of the TP2 and full TP1, which means you will be in deep blues and you will not be worried about that given market. Guys, that is how to have two trades, different trades, how to enter two different TPs on one trade. That lesson was very nice. If you have got a question or if you have got a concern, you want a video which you want to we should be covering for you to know about that given price action, kindly comment down below, like the video, share, subscribe, so that we can do that video for you. If you want my mentorship, online mentorship is 50 USD, and offline mentorship is 150. That is the physical class, 150 USD. You can WhatsApp me. The number will be pinned here in the comment section. Kindly share this video and like, subscribe, so that we can move to 1000 subscribers. This is a young channel which is making things clear and direct to you. Guys, you can see the way we are hitting the market. Stay here every Sunday. Let us meet here for free signals for the week. Thank you, and that was my time.